I created a little video. I call it Buyers Strike Back because we got 2 deals in escrow this week. One was we use an appraisal waiver, right? So there's a difference when it comes to waiving your contingency, appraisal contingency, and an appraisal waiver, right? So
Right.
we'll break it down. So an appraisal waiver is determined by the lender when we run our automated underwriting system, and based on the purchase price, so the offer price, and you have to put down at least 20%, but we put in, when we're running our system, we put in that actual address, we put in the offer price. So let's say the home is listed at $470, and we're going to offer $500 because we want to come up with a strong offer. So I enter in the address of the property. Then I say, okay, we're going to offer $500,000 with 20% down. And then I'm going to hit the automated underwriting system, and it's going to tell me if that property is eligible for an appraisal waiver. And if it is, that means that when we submit our offer, we don't have an appraisal involved at all. It doesn't even come in because the lender, the investor, they have accepted the fact that if someone's putting 20% into that transaction based on this particular purchase price, their models, which they really perfected during COVID, their models have said that we will accept this value. So
when did this come about? Because I've heard this happening here recently.
So we've had this for years, and it was primarily on the refi side. So when I would do refis and there was significant equity in the property, then the Fannie and Freddie, they said, well, you don't have to go out and get an appraisal. Like, we're good. Like, we like that value. It makes sense. You've got enough equity. You don't need to send us an appraisal.
Good. You have a good borrower. Yeah.
Yeah, I mean, based on, the strengths of the file and everything else, but a lot of it had to do with the automation tools. And during COVID, if you remember, you couldn't go out and appraise a property, right? So what they did is they invested in all this technology and AI and, business intelligence. I mean, all the tech stuff that my wife's company knows about, but like all those people and all those bots, they came up with their own modeling. And now when we run that automated underwriting system, we're getting it for purchases. But what's awesome is this is the fast lane, because now I could submit, instead of doing a 30-day closing with a 17-day appraisal contingency and a 14-day loan contingency, now I could do a 10-day loan contingency and a 21-day close, no appraisal.
Nice.
And we're coming in 30, 40, 50,000 above ask, right? So now we can make extremely strong offers, and we've got that, that express lane. So that's one. So I'm encouraging, everybody, if you have over 20%, let's play around with the numbers. Let's see if you're eligible for an appraisal waiver. And when we submit that offer, I'm going to actually do the screenshot showing appraisal waiver eligible. And from that, I'm also going to, have the pre-approval letter, and we're going to say, look, there's no appraisal needed for this property. All we have to do is close, right?
So your screenshot comment, I'll tell you, that is a strong representation of that buyer if you're able to send that over to the listing agent, because the listing agent now knows. I know that they may have said in their contract that they were going to waive the appraisal, but now having the lender say that they're going to waive the appraisal is even stronger. So that's great information to have.
Yeah. So, when we partner up and we're representing a client on an existing home, I'm following up with a phone call to the other agent because I don't know what level of sophistication that other agent has. So I want to make sure they really understand that it's not that we're, waiving our right to the results of an appraisal. There is no appraisal, right? It's just, there's no appraisal involved. So, this whole thing where there's all these little milestones, we're just bypassing.
Well, and so also now you can compete strongly with cash, right? Because cash has always been the king. I mean, when I'm representing the seller and I have offers come in, we got a cash one and you got a finance one, I go to the seller and I say, okay, well, all right, let me tell you the differences between the two, because, you probably like cash and everybody does, but let's talk about the two things. And so that you're really clear about, does this finance offer, because a lot of times people think, well, they have in the past, they're not doing it as much as they used to, but they used to come in and lowball you with the cash offer, right? Oh,
yeah,
my cash.
Investors, right?
Well, the thing is a dollar is a dollar.
Right.
It's not $1.10 when I'm giving you cash. I'm not giving you any more money than you're going to get if you get it from a financed offer, right?
Exactly.
But a lot of times the buyer who had the cash felt like, well, heck, I'm bringing you a cash offer. I'm going to lowball you. And a lot of times, unless the seller was desperate, they wouldn't really look at that, right? They would say, I'll just go with the finance. We do our due diligence on the finance side, and we still do that. But now, because of what's going on and the fact it's so competitive, you have to really align yourself with a lender who's going to make your offer, if you're going to do financing, as strong as possible. Because more than likely, you're going to be competing against a cash offer, if not multiple cash offers. So, having these tools in your quiver, right, that you can pull out, we're having to do that with buyers who are financing their home purchase. And I mean, what are we? 80% of home purchases are using a loan.
Right.
It used to be higher, but now a lot of people are taking equity out of their homes in other parts of the country. Now they're bringing it here to DFW. And so they're coming in with a lot of cash, a lot of times enough cash to buy the house, which is one of the attractive things about the DFW area or the Texas market overall, is you can still buy homes. And a lot of times the equity you're bringing out of a home from somewhere else is enough to pay cash for a house. And because of that simple fact, that's why we're having to compete against cash on almost every deal.
Exactly. And, that brings up the good point, because if you have sellers that they're concerned about putting their home on the market because they're like, okay, well, obviously I'm not going to have a problem selling my home in this market. We did our water bottle example, right? So we put the water bottle and said, this is the only water bottle in the bar. Remember we did that in Grapevine? So we're going to show that in a future video, but that's the reality right now. So if you're a seller and you're the only home on the market, then fantastic. You're going to get a strong offer. But now if you want to go buy a home, now you have to turn it into a buyer and you have to stand in line with everybody else. But something that's very interesting, and I'm encouraging people to think about it this way. If you're listing, if you are a homeowner, you're probably sitting on more than 20% equity, right?
Yeah.
Odds are, if you've held that home for some time, if you bought your home 4 years ago, you put 10% down, you're probably over 20% equity.
Have you seen your tax bill?
Have you seen? Yeah.
So absolutely. My tax bill states since 2017, my home has gone up 53%.
Wow. Yeah. So, I mean, those numbers right there, just
5 years.
5 years.
5 years, my home has gone up 53%.
Right. So what sellers need to realize, or homeowners need to realize, is, they hear, oh my gosh, I don't want to get, bid over ask. And I don't want to, I don't want to just, have to go out into the market and be a buyer. And it's just going to be so awful. And, I got to compete with FHA and all that. You don't. You know why? Because you have equity, right? So unless you're buying, this huge monstrosity mansion, if you're just going from, one great home to another great home, you use all that equity that you have, do an appraisal waiver, and now you're in the fast lane again.
Right. And so when
you have the equity, you have the 20% down.
Well, even sometimes if you go more. So when I look at, when I get multiple offers on my listings, and if I don't have a cash offer, which happens, not as often. What I mean is not as often as it used to, where every offer was financed. Now that there's more cash offers coming. So, but in the situation where I do have multiple offers that are financed, well, the next thing we look at is down payment. Is somebody doing 5% down, 10% down, 20% down, 50% down? Guess what? 50% down, ding, 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 right? If you can get into a position where you're putting more than all the other folks and going over asking, then your offer kind of rises to the top.
Absolutely. No, I remember when my aunt and uncle, when they moved from Colorado, they had sold their home in Colorado. They're moving here to Texas. And the first question, the listing agent said, well, it's a VA loan. And I'm like, they're putting 50% down. The minimum investor percentage is 0. So unless that home is worth like a quarter of what you listed it for, it's gonna appraise, and it doesn't matter. They don't have to put a dime into the transaction. So I don't care if it doesn't appraise for $200,000 less. It's going to close. The investor minimum is 0, right? And so after explaining that to the listing agent, they're like, oh, okay, that makes more sense. But they immediately see VA and they're thinking, oh my God, they don't have the reserves, they don't have the money. And I'm like, no, they're exercising their right because they're a veteran. It has better pricing. They are owed that by the government. They're just being smart about what they're wanting to do. Just like an FHA buyer, that's the minimum is 3.5% down, but if they had 10% and they just want to choose FHA because it's more favorable, maybe they have a lower credit score or whatever, and it just makes more financial sense. It doesn't mean that they're not qualified buyers. It doesn't mean that they only have enough for 3.5% down. And that's why I always present, here's the proof of funds, here's what I've identified. And, if we need to, we'll actually say that, if the home is, listed at a certain level, we will say we are willing, with our contingency, the home must appraise for X amount, right? Or we're willing to put in $10,000 into the transaction, versus just doing a full appraisal contingency.
Yeah.
Right. So but that's the whole thing. I mean, a lot of people think that, okay, if I'm going to put 20% into the transaction and the home doesn't appraise, then I immediately, and let's say it appraises for $50,000 less, they think, oh man, well, I have to put 50,000 in. You don't. The investor minimum is 5% if it's conventional. So you might have mortgage insurance, but that doesn't mean you have to put all that money into the transaction. And that's what people don't understand. And that's the appraisal gap, right? People have heard of the term appraisal gap. They don't really understand what it means.
Well, hopefully people are watching our video and now understand that there are options. So, just because you don't have cash doesn't mean you can't buy a home.
Exactly.
But definitely getting us on the phone and having a chat about the options about buying a home using financing. There's ways to go about that and be successful.